Hi, and welcome back, my FX enthusiasts. Right, this is CMG Aura Space back on the screen, and we present to you FX weekly forecast. We do analysis on DXY, and that's the American dollar, and then the JPY, the Japanese yen, and then sometimes on gold, and sometimes we give you a glimpse on the stock market. Right, so if you are new here, this is what we do every week, and then in the course of the week we come back to tell you, either confirm or tell you otherwise. But we don't leave you all alone. We guide you, we give you signals free, and then some guidance, and then even training, if for free or premium. Just check in this video description, the comment section, and then also the bio for all the information that you need concerning our disclaimer and everything. Right, now a recap on the recent week. That was January 19th, January 19, right, to January 2024. What am I saying? January 2024, right? January 24. So our forecast or expectation was that we're expecting DXY and then the JPY to generally sell, and that was what's happened actually. So in terms of win rates, we had 100% win rates, right? 100% win rate, and that was massive. No, I'm not saying this just not to brag or anything of that sort, but to tell you whatever we do. If you have been on the channel, every week at the end of the week we tell you whatever went on in terms of percentage, in terms of the winning or the losing aspect. Then we continue to the next. So the recent one, we had 100%, which means that all the setups that we put out there, we didn't conceive any loss in any of the trades. That's what it means. Unless you are still in a trade, some of the trades, maybe you are swinging. So if you are swinging, you may probably be in profit. In fact, not probably, you are actually in profit, but just that you are holding on to your positions. So that was what went on in DXY, and then JPY, and even stock indices, right? So we had 100% win rate. Now on the stock indices, right? In fact, let me not waste time. Let me just hit the grounds running and then start doing the analysis. So I'm not going to go back again with the individual recap, but we are going to continue or zooming into the analysis for the pending week. So this is your DXY on the 4H. So here the practice is top-down analysis, the higher time frame down to where you want to trade, and then the third one is the lower time frame. So for 4H, we trade 4H. So which means that if you are doing top-down analysis, we take the weekly analysis, we take the daily, and then we take the 4H, and then sometimes I go down to 1H to do analysis. Then when there is a unanimous agreement between each of these different time frames, then we can be setting and then enter the markets as we wish to. So that is what we do. So now on DXY, I have already done analysis on the higher time frames and all that, and even the lower time frame. And for the sake of time, I can't be switching between the windows or the different time frames. But if you trust me and you have been on the channel, you know this is what you do, right? So on the 4H, this is what I am expecting on the 4H. That's the DXY and the American dollar, right? So at the moment, right, let me go back a bit, right? At the moment we are here, right? You can see where the candlesticks are, the red, the green, and then there's the third one or the last one, small green, which has not even closed yet. So it will close and then open again around 9 p.m. I think the time that I have is probably in less than 25 minutes market to open. I'm doing this on Sunday at the time of 8:35 p.m. 26 January 2025. So what I'm expecting here is that the last week or the recent week, we were expecting price to hit to this level, right? Market to sell. That was what we were expecting, to sell to this point. And after selling to that point, then we see whatever is going to happen, the candlestick formation or the pattern. Then we'll decide if it is bearish or bullish. Then our perspective will change. So lo and behold, market was around this place. This is what was happening, and then you go to this level, and I was expecting what, a pullback for it to be respected at this point, and that was almost at that point. So that is correct for my analysis. And then texted nicely, and then started dropping down. Now dropping down again, I see this purple area more like a rectangular level where I was expecting price to get there, and when it breaks below, then once again my confirmation will be what, will be right. Then it means I'm going to continue holding on to my positions. But if you got here and then started misbehaving, I'll have to exit. So lo and behold, if you can see something here, look at this candle here. There's this red, which looks more like a hammer, right? Count from the last candle to the what? The fourth candle, right? Count from the last candle, that's the green, to the fourth candle. You see that the candle still forming there. It looks more of a hammer. And hammer is, you know what is a hammer or a pin bar candlesticks? It's a bullish type, even though the candlestick is red or bearish candlestick. But in terms of anatomy, that candle is a bullish type. I hope you understand that. If you don't understand, check on the platform for beginners, intermediate, and advanced, and you understand whatever I'm talking about, especially in the intermediate class, where we address everything concerning candlestick patterns and the information, the psychology, and everything behind candlestick formation. So now, when we were in trade, this is what happened. I'm talking about the candlestick, that bullish, even though it's red candlestick. You see, market broke below this, right? And then all of a sudden, market started coming up, looking as if it was going to be rejected. So if you are in a trade of this kind, you panic, and you probably, which I understand, if you should exit, I understand. So exiting doesn't mean you are a bad trader. You can exit and then look for another thing if it's going to be respected or maybe break below, right? So here, I'm sure people who were trading this will have that fear, panic, and then they will exit. Of course, I'm not saying that I don't have feelings. When I got there too, I also had some reservations of doubt. So I began to panic, but I have to keep quiet and then respect what my setup or my analysis. So that's what happened. Sorry, it got there. It started dropping below, and it came back to that purple line again. But I had the hope. In fact, I respected my setup to the extent that I knew it would get there and start coming down again. And lo and behold, probably it started coming down again, moving to the next candlestick, which is the bearish. So it started again and came down even and broke below. Now the last two, you see, the bullish candlesticks. Now, one may say, why am I talking a lot? What do I mean? What do I expect, or what am I expecting? So what I'm expecting this week is that I'm expecting price to move a bit up to that zone again, this zone again, looking like more like a pullback. It gets there. Now, when it gets there, now I don't have any running trade. Do the same thing. If you trust my analysis and you want to follow me, don't enter the trade yet. Let's wait and see what happens around the MA, right? You see some line, the black line, like it's not a straight line. That line, yeah, that line. If you know this line, right? So no, I'm not talking about the horizontal line. This line, yeah, you see it there. That's what I'm talking about. I'm going to click again, right? So that line, yes. So I'm expecting price to get to that level and see what happens. If it breaks above that line, then the structure has changed, the market structure has changed, or character, whatever, has changed, and then I'm going to start looking at the market from a different perspective. Now, if that doesn't happen and price break below, it gets to this line and start coming down again, I'm going to what? See that the DXY is going to continue selling. Now, generally, why am I saying that? On the higher time frame and then even on the lower time frame, generally DXY is what? Plummeting. What do I mean by that? Plummeting is selling. DXY is in a bearish trend. Is selling on the higher time frame. The weekly, if you like, check the weekly time frame, the daily time frame, the 4-hour time frame. Even going down, DXY is in a downtrend. it is selling in the bearish state. So that is what I'm expecting. But it's not going to be linear. Market does not move in a linear sense. It's going to be what? Pulling back, going up, coming down, going up, coming down. But the general movement is that DXY is selling. So, but on a 4-hour time frame, which we trade, I'm expecting price to be what? Breathing in, breathing out. Yes, pulling back here and there, sometimes faking out and all that. But you have to be careful. So that is why we have one specific tool, our savior, our safety net, which we call the what? Your risk management, right? Your risk to reward ratio. You have to manage it well, so that if you lose, you can enter again with the capital that you have. So don't risk all your capital, not more than 1% in a single trade. That is the advice from here. So that is what I'm expecting here. Expecting price to bounce back to this line again, and then if it breaks above it and gets to the moving average, then I'm going to what? Have a change of perspective. Yet I'm going to relax. But if market opens the first day, Monday, at the end I see that price has broken below this and is now below the green. There's two candlesticks, the green one. Then I'm going to assume that market is going to continue that way. But my hope, or what I would have loved, is that market will pull back a bit and start coming down. That will give me more entry, more pips to gather, to grab. So that is what I'm expecting. Now, if price should continue selling, I'm probably expecting to get to this blue line. I explained to you what the blue line is. The blue lines actually are my horizontal resistance and support level. It means that when price get there, I have more confidence that market will be reversed or be respected. That's what it means. Notwithstanding, if it doesn't happen, I'm expecting price to get to this black line. Black line means that it's not actually going to change the trend, but it's going to be respected, and then there will be some reactions there. So you can actually use it to enter or exit and then see whatever is going to happen next. So the same way, I'm expecting it to also this line. So what I'm expecting generally is that I'm expecting more dip on DXY. Now, bear in mind, this dip may not readily happen within this penny week that we are talking about. It can actually take a month to get to this level. So that's why we have something called swing trade. So you can be in this trade, and then if you have the right position, the entry is the important thing. We have entry and exit rules. If you don't know, if you want to master this thing very well, I have a video on this, on mastering your entry and exit rules. It's very, very important, key to trading, right? If you have the correct position, if you enter well, you can be at ease, no fear. Even when market pulls back, you don't have any problem. But if you don't enter at the right position, that's where you have this reservation and a doubt, and then panic and then fear will let you exit the market too early or prematurely. So that's what I'm expecting. So once again, price will get here, but it may take more than 2 weeks, but it will gradually get there. Else, if you go back and then it gets above this line, and then the MA, then the structure has changed. So that is what I have to say on DXY. Now let's move to JPY. Right. Now, what is happening on JPY? JPY, once again, like we said last week, I told you that if price breaks below this black line, then I'm going to expect more dip. Generally, I told you, and that was what happened actually. So you can check this yourself. And then in the course of the week, I started coming again for more entries, and then more if you want to exit, if you want to enter, add more scaling, all that. The black line was actually what helping me. So whenever price breaks below, I add more positions, or I exit and re-enter. So that's the strategy. So for it to give me better entry. That's what I was doing. So generally, if you had entered first on the first setup, and you really trust the setup, and you don't have problem with fear and panic, you could actually have entered here, right, and be enjoying all throughout to this level. You see the black line, and then very profitable. So it means that you may have gathered more pips, more dollars for yourself, or whatever currency that you are trading in. So you see what is happening. So now the week 5 ahead, bear in mind we are doing week 5. So I'm going to clean out some markings so that we continue with the week 5 analysis. I'm going to clean these things out. So now bear in mind, once again, we are here. right? I see the black line. I told you what the black line means. I'm not going to explain them again. So once again, the black line, price is below, in fact, between the black line and the moving average. That black line that I was talking about, it looks like a crooked line, not a straight line. So the moving average is this one, right? You see the small white dot on it. That's the moving average. But if I say black line, I'm referring to these horizontal lines, right? These ones, right? This is what I mean. So now, generally, I'm also still expecting price to drop on JPY, probably to this line, right? And then to this black line, and then a pullback, and then we start going on. Else, price may move up again, and then starts changing the structure and buying. So you can see that DXY and JPY have the same market structure at the moment, and which is quite it makes me feel uneasy and quite doubtful on what is happening in the course of this year, right? This year, what I've observed is that DXY and JPY are moving the same direction, but bear in mind, the same direction but not in the same magnitude or percentage change, right? So it means that DXY could be buying 50%, sorry, 0.50%, and DXY is selling, sorry, okay, let me put it there. DXY is selling 0.60%. At the same time, JPY is also selling, but this time the percentage is probably 0.20%, right? So selling negative, but in terms of magnitude, this one is 0.60 and the other one is 0.20. So they have different magnitude, which we call momentum or percentage change, right? Yes, or yeah, in terms of the heaviness, that's what I mean by that. So they are moving the same direction, and I'm feeling some kind of that. But hey, one thing that you should do in this financial market is that we trade what we see. Don't trade what you think the market should move. I don't know if you understand. We trade what you see. So, and this is pure technical analysis. Don't be assuming, okay, you want the price to move this way, so by all means it should move this way. You should trade what you see. That is what we call technical analysis. Then fundamentals later, I will use it as a confluence in the course of the week to tell you when to exit, even though the price is moving in a direction. There may be a pullback, a spike, whatever. So we use fundamentals to come. Fundamentals actually come to change the market structure. That's one thing that they do. They come to give us volume, volatility, spike, right? So sometimes in the direction that we are expecting, price will reverse or pull back in terms of in terms of fundamentals. Then later they will start coming back to the same position that they were moving or direction that they were moving. So this is where you see fear and panic in the market. The same thing happened on JPY last week. I think in the Asian time, when the Asian time were closing, and then we are giving it to the London session, something of that sort happened, right, on JPY. So that's what's happened here, and this is what's happened here. So you have to be observant. Hold on a minute. Yes, so sorry, so that is it. So so what I mean is the same thing. I think the market structure or the analysis is similar to that of the DXY, right? So we are trading what we are seeing and not how we feel or we want the market to move. So bear in mind, whenever there's a change or anything that I see to be different, I'll come back in the channels, check in the video description, like I said, in the channel, and everything is there. If you want a premium services, free services, training or whatever, yes. But in so far, I'm giving free signals. You can trade and enjoy. Yes. So that will be all for DXY and JPY. Now on the stock indices, right? Let me go here. Okay, before that, let me go to gold and see something there. Right. So Gold, we have been quite bullish on gold, very profitable. We started around this place, we move here, and now see where price. So it's even above what we even expected, right? A swing trade, very profitable. This was the forecast, but it took 2 weeks to hit this level. See what is happening here. You see, that is the price on gold. It took 2 weeks to hit this. So, but we were taking profit in the course of the week, the subsequent weeks or not. So you see what is happening here. That is it. So now we have gotten to this level. I'm expecting a dip on gold, but that is not final. Of course, I don't actually do gold much of analysis on gold and then the stock indices. So I only come to put signals and we trade. So it's like we trade on the fly. What do I mean by trading on the fly? We do analysis the same day and then we enter the same day. We don't do like a weekly or a prelims analysis on on gold and then the stock indices or the stock market. So the same thing is happening. I'm not going to talk much here. Let's see. Right, so the same thing, you can see it here. Right, so you see, this is it. Right, and here. Right, so here you see there was a breakout here. I was informing you guys, so that is it. I actually exited this. So you see, quite profitable. The same thing for the other pairs. So I wouldn't waste the time here. I wouldn't go on. I will meet you in the channel where we get a trade, look for some guidance and then some advice and training. Right, so I'll catch you in the next one. Stay blessed, protect yourself, and trade safe. Bye for now.